Hello guys, welcome back. So in this video you're going to take things a bit higher based on the previous video I did talk about just trading by observing candles like this without even changing the time frame. This is the daily time frame. I said a very simple approach to trading is waiting for the candle to open, form a high, drop lower and close. So your trade entry is here and your exit is here. I said in that video that as price is forming the high of this candle, you place your sell stops right at the entry or the open of this candle. As this sell stop is activated, you place a stop loss right above there and you take profit, whichever take profit you want to take, or you wait until the end of the day to close the candle. This simple approach is based on candle formations and you do not need advanced trading techniques or market analysis as advanced traders do. Nothing complicated. This is not complicated, just observing candle formations. Now this happened on Tuesday. If you placed your sales, this was Wednesday. If you placed your sell stops here, immediately the sell stop is activated. Your stop loss right above this high, and you want to take profit of maybe 3, risk reward ratio of 3, or you will wait up to the close of the day to close this trade manually, and this is it. You get a 5.61. Again on Thursday, on Thursday, same thing, same entry. The candle opens, forms a high, you place your sell stops. Immediately the sell stop is activated, you place your stop loss above this high. You want to target a risk reward ratio of 3, or in a similar case you can wait until the close of this day right here and close this trade at a risk reward ratio of 3.3. Same thing on this Friday open. Friday opens, price goes high. As it is going high, you place your sell stops at this open. Once that sell stop is triggered, you introduce your stop loss slightly above this high and you want to target a risk reward ratio of 3. You can see that was 3, but you can wait till the close of the day, manually close the trade before the day closes. Because this is Friday, you want to close it a bit earlier, because if you delay even by a minute, your trade will be locked in for the weekend as the market closes, and you will have 5.7. However, I want to introduce you to a better way of taking entries, getting confirmations and taking entries, and this is based off ICT 2022 model. It's a very simple model, it's not complicated. And you are just looking for 3 things. The first thing you're looking for is liquidity sweep. I'll go through a rough idea of what that is. The second thing you're looking for is market structure shift or change in state of delivery. The third thing you're looking for is areas of interest or PD arrays, as ICT traders love calling them. Is that that simple. It's a very simple model. There's nothing complicated about it. We will look at Wednesday, Thursday, and Friday. I hope I'll manage to do this quickly so that this video doesn't become long. Now, so Wednesday candle opens here at midnight. The moment it opens in the daily time frame, we want to go to the 5-minute time frame. Why is it? We want to look for that midnight open, which is right about here. So that is our daily open on Monday daily open. As it opens, you are looking for an impulsive move in either directions. In our case, we have an impulsive price make an impulsive move to the upside. And because this is happening, we know this is a very high likelihood that it is forming the high of the day and then drop lower. Our previous entry model was based on just placing a sell stop on this open. Price will come, tag the open, tag the sell stops. You'll place your stop loss here and you wait for the trend to play out. However, for this entry model, ICT 2022, we are looking for a liquidity sweep. Liquidity sweep is price is forming higher highs. In this case, it is quite rangy or ranging, meaning that there's a pool of liquidity right here. But the thing is, liquidity sweep is this high is taken out. And then as it is taken out, price goes up and drops lower. When it drops lower than this low right here, this is our market structure shift. Let me just rename that buy side liquidity sweep, because this buy side liquidity is taken or swept. Change the color also. Right, so as that happens, we have a market structure shift right here. This is our second condition being met. And then the third condition being met is areas of interest. Areas of interest or PDRAs, these are, doesn't want to do that. These are fair value gaps, inverted fair value gaps, breaker block. So where is our fair value gap in this area? First of all, market structure shift has happened. Price is now trading lower. So where is our fair value gap? Fair value gap is right here. If you want to know about this, you don't know what a fair value gap is, you can watch the ICT 2022 model, or I'll do another video to explain what that is. So this is a fair value gap. Come here, you'll notice price react off it, right? Place your entry there, stop loss right above this area, a take profit of 1 to 3 right there, and you can see our take profit was tagged. So that is based on the fair value gap. If the fair value gap doesn't exist, we will look for an inverted fair value gap. I am saying this, look for these three things these areas of interest after market structure shift. The second one is the inverted fair value gap. We have the inverted fair value gap right here. Can zoom in a bit. Inverted fair value gap. Again, almost the same area of entry. IFVG. Inverted fair value gap. Almost the same area of entry. The moment price tags into this inverted fair value gap, we take that entry. Right? Stop loss right above there. Then you want to take risk to reward ratio of 3. Right there. Again, our take profit was tagged and hit. The third area of interest is a breaker block. So where's this breaker block? The last series of down close candles. Before this impulsive move to the upside, we can have these two candles right here, because these are wicks, largely wicks instead of body candles. So this is our breaker block. Again, if you don't know what a breaker block is, you can go to ICT 2022 model and watch it, or I'll do another video to explain what that is. But price reacts off this breaker block again. Similar entry as our previous entries. Price tags into this breaker, stop loss there, and risk reward ratio of 1 to 3. You can see this was hit. Now, so that is the case for Wednesday. Let us look at the Thursday candle. Delete this, delete this, delete this, delete this. The third or the Thursday candle. Let us look at the Thursday candle. So this is the Thursday candle. Opens, forms a high, then drops. As this high is being formed, basic entry model is place a sell stop at this point. Once this sell stop is triggered, you will place your stop loss slightly above the high, and you want maybe to take a 1 to 3 risk to reward ratio of 1 to 3, like that. Okay. Now, implementing the ICT 2022 model for our entries, we want to drop to the 5-minute time frame. Okay. So we want to look for Thursday midnight open. Where is it? Right here. Thursday midnight opens right on this candle, and then immediately we have an impulsive move to the upside. You can see this, and another impulsive move to the upside again. This becomes our confirmation that price is likely forming the high of the day before dropping, and you can see it dropped. Our previous entry was as simple as placing a sell stop right here. Price activates the sell stop loss right above this area, and wait for the trade to play out. However, introducing the ICT 2022 model for entries, what do we look for? We are looking for number one, liquidity sweep. So where do we have it? We have it right here. This high has been taken by this candle. So that is our buy side liquidity sweep. Now, as we have this impulsive move to the upside, we know very much likely the candle or price is forming the high of that day, and as a result we are only going to look for sells. So the first thing we look for is buy side liquidity sweep, and that has happened right there. The next thing we look for is a market structure shift. Price comes here, forms a low, and then goes and sweeps this high and drops. This low here, price has to go lower than this low for it to give us a market structure shift or change in state of delivery, and that is what happens here. Now, something to point out, wicks do not represent a market structure shift. That is why I have extended this line to this area. There has to be a candle body closure below this low for it to become a valid market structure shift. Now, what is the next thing we are looking for? A fair value gap, inverted fair value gaps, or breaker blocks. Looking in this area, we do not see, I don't think there is any fair value gaps or inverted fair value gaps or nothing solid. The one we have is this fair value gap here. It is inverted. Remember, at this point we have a market structure shift now. However, the range is small and price may not target. So what we want to use in our case or in our scenario is we will use a breaker block, this series of down close candles right there. Once we have that, this becomes our area of entry. So you'll notice market structure shift, price trades lower and comes to tag our breaker block. The moment it tags the breaker block, we enter, execute our trade, stop loss right above this high. We want to target a 1 to 3 right there. How long did this trade take to play out? Our entry was at 2:25 on Thursday morning. Our take profit was hit at 6:25 in the morning, and we have our trade of the day, and we closed that day there. So this was the Thursday candle. Quickly going to the Friday candle, we see what happened. Same thing. As a beginner trader, price opens, goes up. As it goes up, you place your sell stops here. Stop loss right above this point. Take profit of 1 to 3, or you wait until the close of the day. and close the trade manually. However, let us introduce the ICT 2022 model. Friday opens. New day open. Drop to the lower time frame. You can actually mark the new day open on the lower time frame. You don't have to switch time frames like this. You want to locate the exact place where the new day opened. And where was that? Thursday, Friday, right on this candle. It opened at the top here. So we have this open. Price makes an impulsive move to the upside, right? As this impulsive move is being made, we know there's a very high probability that this upside movement is forming the high of this day. Right after it has done that, we are looking for the first thing, liquidity sweep. In our case, because we are forming the high of the day, we are looking for buy side liquidity sweep, and that is what happens here. This high is taken out. Remember, liquidity sweep can be by candle wicks, not a must by the bodies. In that case, we also have this sweep right there, because this wick takes out the buy side liquidity of this candle. Now that has happened. The next thing we are looking for is a market structure shift. Number 2. Condition number 1 met. Condition number 2, we need to have a market structure shift. Now where do we have the last down close candles before this upside movement? Right here. This, let me just annotate this, buy side liquidity, market structure shift. Market structure shift has to be by body, candle bodies, not by wicks. Immediately we have this condition met, the market structure shift. We are looking for areas of interest within this area, from this market structure shift to the high of that, this high right here. So what do we have? We have maybe all of them. We have an inverted fair value gap here. We also have this breaker block, and we have this fair value gap. You can already tell that this was a good day, even without having to go the extra steps. So these three became our entries. I will choose to use this inverted fair value gap to give us a better entry. Remember, we have our market structure shift, so we are not sure if this price will come all the way to here. We can have our first entry on the breaker block right there. So price trades lower, gets into our breaker, we place our trade there. Stop loss right above this high, and we want to tag risk reward ratio of 1 to 3. This is Friday open. Right there. We took our entry at which time? at 1:45 a.m. in the morning, and at 8:15 in the morning we hit our take profit, and we are done for that day. Now, entry based on the inverted fair value gap. This was a good entry. If you missed the first one, the breaker block entry, you can take the inverted fair value gap entry right there. Stop loss at this high. We want a 1 to 3. You can even take a 1 to 4 this time. And we look. We took this trade at 1:50 a.m. in the morning, and at 3 a.m. take profit was hit. Entry based on the fair value gap formed. We had this fair value gap here. Price trends lower. This fair value gap is almost the same entry as the inverted fair value gap, the breaker block I mean. There's a term for it the ICT traders use. When a breaker block unicorn, the term is unicorn. A breaker block is in the same area with a fair value gap. That becomes a very high probability entry area. So we have this breaker block and we have this fair value gap. Entry at as price gets into this breaker, the fair value gap, stop loss above there, and we want a risk reward ratio of 3. And guys, that is how you introduce ICT 2022 model to this very simple, stupid, basic trading strategy. Nothing complicated. Even this model is not complicated. It's very simple approach. 3 days of straight wins: Wednesday, Thursday, and Friday. Those 3 days gave you a total of 9 risk reward ratio. Now, in the next video, I will talk about how you can advance this further. And we will talk about taking advanced entries using premium/discount zones. I will still use the same examples. In these examples, we'll use premiums, and this is going to give us very tight stop losses and very high risk reward ratios, sometimes going up to 1 to 10 or 1 to 13. I saw a trade that gave us up to 1 to 13. 13 RR is very good risk to reward ratio, but that is going to happen in our next review or video, and up to that point, see you next time.